Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us at the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating bookmap order flow tools with auction market theory using the volume profile as a chassis. One moment. Okay. So you guys know I am streaming from Costa Rica, and I have some unstable internet and power today. So if I drop out, this stream will reconnect if you're in YouTube. If you're in the Bookmap Discord Trader Lab community on Discord, I will also come back, but it might be a minute or so. So please accept my apologies in advance. The thing we have here is monkeys run around, and they, for some reason, they run on the internet cable. I guess it's kind of like a highway for them. So please be patient. If I drop out, I will come back. Also, I have some important messages for you regarding some opportunities. If you've ever been thinking about Bookmap, checking it out, it's a high-tier order flow tool. I've been using it since 2015. And I would not trade without it. And quite frankly, made a big difference for me in my trading since when you're in a competitive environment, you really want to kind of line up your tools that actually can give you a statistical edge. A lot of things I believe as retail traders that we think give us advantages or quote certainty actually create conflict and ambiguity. So what I have found, and this is going on roughly 45 years of trading, both professionally and otherwise, is that being a minimalist creates maximum clarity in an uncertain environment. Now that might sound kind of a contraindication, but trading is uncertain at all times because of the different things that could come in to disrupt the current mode or behavior of the market. So if we're going to try to have a process that can create a statistical edge, and this is what the Trader Lab is based on, operating in uncertainty, we really want to eliminate ambiguity as much as possible, even though it's always uncertain. So that is what I have found. And again, I've gone in the opposite direction with trading systems and very complex methodologies that I built when I was managing dollars to the opposite extreme. Because what we tend to do when we have a lot of inputs is curve fit. And curve fitting, unfortunately, is looking backwards when we're actually, you need to be here now. So I'm just giving you a little sense about my background. Not that it's important as it relates to you, but it might save you some time and trouble, if you will, to shorten your learning curve. And that's why I agreed to do the Trader Lab. And I appreciate the Trader Lab because it's a community of like-minded traders who come together to leverage their collective experience. If you come to Trader Lab, you're going to find something really unique. Now, what's going on here? We have some sales going on. Now, this sends ending December 6th. You can still save 50% on Global Plus and the CME or NASDAQ data. Let me try to clarify this for you. It's 50% off 3 months of Global Plus and data, and the offer ends this Friday. If you wanted to take advantage of this to me is the sweetest opportunity I have seen Bookmap offer to date. And I will tell you that I've been using Bookmap since about 2015. They didn't do this. If I had a time machine, I'd go back, but I don't. But you guys can take advantage of it. Also, we have Cyber Monday. You get 60% off your first month of Global Plus. It does not include the data, and that ends on the 12th at midnight. So if you were thinking about this, I think the Black Friday, 50% off 3 months, and including the data, is like pretty cool. So, and there's one more. It's amazing. Now, this is for Bookmap subscribers only. December 10th to 12th, there's going to be a competition, and it's exclusive to paid Bookmap subscribers. It's Global Plus with data. It's a free MBO bundle package access that stops an iceberg detector, TraderMap Pro, Market Pulse, Algo Suite, very cool, and the liquidity tracker. You can find out more about this and much more if you go to bookmap.com. Now, the only reason I'm sharing this with you, first of all, Bookmap offers this to you, but also I'm a firm believer in the product since I use it myself. So and I know a lot of us, we think about costs, right? Oh, I don't want to spend. Well, there's two sides of this business. It's investment and also tools. And you need to always reflect on who is your competition, what tools do most of them use, and can you extract a statistical edge? And this is what the Trader Lab is based on, edge. The tools that give you an edge are the ones, in my opinion, you should invest in. The tools that create conflict, ambiguity, and thrashing are the ones you might want to reduce or eliminate. Isn't that logical? So that's all I've got to say about this. I may get to revisit this a little later on, and I hope you're getting something out of this. And for clarification, go to bookmap.com. It explains all of these so you can go take a look at them. By the way, how we doing? Are we okay in YouTube and the Bookmap Discord Trader Lab community? Also, please remember, if I disconnect, I'm streaming from Costa Rica, and if things go down, I will come back up in YouTube. And as far as the Bookmap Discord Trader Lab community, we'll do our best, but I suspect I'll be able to come back in. Thanks for your patience. Let's get going. Now, what did we do? We gapped higher. So we opened higher outside of yesterday's range on a gap. So what has been happening here? Well, we might agree we are in a bull market. We opened outside of yesterday's range, and that gives us some statistics. So take a couple of notes. Remember, you have to vet everything for yourself. Taking out let me just get basic here. Taking out the first hour's high, about a 68% probability. That's called the IB high. We're not there yet, don't forget. Taking out, because this is current levels, this is the RTH open. So just so you know these statistics. Now, we don't know when, how, if. Getting to the previous high, which would be filling the gap, about a 63% probability. Getting to the previous close or settlement, a 48% probability. Getting to the ETH high, about a 76% probability. Getting to the ETH volume point of control, that's the highest volume, is about a 79% probability. So, kind of nice. So let's take a look. So this is our RTH open. By the way, am I doing okay over there? Can you guys hear me okay in Discord? Because I can't tell really what's going on. Yep, okay, thank you. Thanks, Marty. Oh, excellent. Lucky, thank you. Thanks, everybody. Let me see what's going on here in YouTube. How are we doing in YouTube? Is YouTube percolating? I can't tell what's going on in YouTube. Please give a thumb up, a like in YouTube. Lets me know that we're okay there. All right. Thanks. Thanks, Dan. Okay, guys. And I want to thank the Bookmap team for, watching over this stream in these conditions here out in the jungle. Never thought I'd be streaming from the jungle. It's warm. Okay, this is called this. Now, there are going to be some gaps in the data, guys, and that's because the internet drops in and out, power goes on and off, and, the monkeys use the cable as kind of a highway. So sometimes, they just disrupt things. So we get our open. Now, let's look at some of these levels. ETH, volume point of control. We have a high probability of testing that. What does it represent? Well, first of all, it's almost an 80% probability of going there. And if we open, and the open should be probably covered up, I think. Guys, RTH open, can you give me that price? I think it's covered. 6080. Okay, thank you. So this is the RTH open. We have a high probability of testing here. And so when we open, we tag this. Now, why is this relevant to us? Because this is where the most volume transacted. And I believe we tagged it right there. And I can't tell exactly because my data has been a little funky. But so that's our target. Now, the thing about it is if you hit it and the price becomes too high, we can counter rotate. Now, nobody knows what it's going to do. You know, this is part of the excitement. So this is called a variable high volume node. And I made all this up back in the day because I didn't know what to call it. And nobody else was doing it this way that I was aware of. And this is in the mid 1980s. So I started observing behaviors. And I said, well, what does it mean? You ever ask yourself, what does it mean? Well, I ask myself, what does it mean? It isn't just there's a line on a chart. What creates it? What's the behavior? This is kind of a forensic kind of a deal where you need to be thinking of why does it go here and then come down? Why does it come back here and test and then exhaust and go down? Now, there's no precision. The thing about this is to think in why. Why? Not will it, but why might it? Might, maybe being the operational term in all this. So if I know this is potentially too high, and remember, trading is like shopping, so let's not make this complicated. And I understand complexity. We tend to think the answer lies in the complexity. So we make it complex to rationalize why it's so difficult. Well, it's really complex. If you ask somebody who doesn't know anything about trading, you say, well, that's pretty complicated. You go, so yeah, it is. Well, how about it's not complicated? Maybe it's just random. Write that down. Let's redefine what trading is. Random, not complicated. So if we remove the term complexity, we can then accept the potential for simplicity in an uncertain random environment. And that is not the same thing as complicated. That is random. Now, when you accept randomness, you want to strip everything out that creates conflict and, quote, complexity. Does that make sense? By the way, I'm mentioning this today because we're having this conversation in the Bookmap Discord Trader Lab community. It's very important to understand the obstacles we place in front of ourselves, and we rationalize them. It certainly is complicated, so we think more maybe creates more certainty when it actually creates more conflict. If it creates more conflict, we certainly create more complexity, don't we? Just think about that. Mull that over, as they say. So, too high, breakdown. This is called VPOC migration. I did a specific webinar on this. This is an advanced process, and I always suggest, and those who listen might have a better go at it, that this is where you study. You study this behavior because this is the auction on steroids because of the speed and the transitions in the volume and the market behavior. You need to understand this and not trade it. Now, if you're experiencing FOMO, which is very common, by the way, for all of us, like you want to trade and push the button, you're looking for a dopamine fix. You're not thinking that you're building a business for yourself. You're thinking about playing a video game. We're not in that business. Video game is fine. Just play the game. Video game. This is the business. You're in business. Let's watch the behavior. So what do we know? Potentially too high. What do we know about this? Potentially too high. This is auction market theory. Let's look at it. What's too low? Here, variable high volume node. Now, in this situation, if you're aggressive, you can get bounced around. What is the trend? It is up. And what might we anticipate on a gap? Well, open, get some responsive selling. Oh, I got a gap. I'm going to take some profits. Then what? Potentially long after the selling. That's what makes this a very dangerous scenario. So let's look down here. Too low. Remember what's too high. Too high. Watch right here. Too high. some sellers here. What's too low? It's down here. This shifts down here, shifts here. Variable high volume node, cross above. It's a two-sided open auction. You can very easily get scrambled in this. Easily get scrambled. So this is our opening swing high. This is our opening swing low. So let's just watch the behavior. VPOC migration. Now here's a way to think about this. Now I did a specific webinar on this. I just want you guys to know. And if you're interested in it, you should definitely go to the Bookmap Discord Trader Lab community. There's no cost. There's a link in the bottom of YouTube. And watch in the library of webinars. You need to understand if you're interested in the language of the market. Because remember, I don't use indicators. Indicators, I have no problem with an indicator except it creates conflict. And they're lagging. And we tend to use multiple indicators and quote multiple time frames. I find that's not so good for me. So I don't do it. Did it. So let's look at what we have. Right here, we have a variable high volume node. Think of these like shoppers. So, and we're only in here, what? Not even a minute yet. How do you make determinations less than 1 minute? You have to be extremely skilled and be able to translate. So most of us who are learning to speak a foreign language, or let's say play a musical instrument, cannot make that translation. It's normal. So what you need to be thinking about, in my opinion, again, is unconscious competence. If you wanted to speak a foreign language, how do you learn it? Well, you've got to first of all, we start out incompetent. Let's just accept that. And then we have to become consciously competent. That means you're kind of taking the step of translating in your brain. What does this mean if you're learning a language? At some point, you transition into unconscious competence where your mind is skipping that step. That's why you would want to narrate this and force your brain to get past what does this mean and go, yeah, this means such and such, too low. Here, exhaustion, absorption was here. We come down and test the absorption. Now right here, there's no way to know until we cross above it. Now this is too low. Let's watch. And remember, if I drop out, I will come back, hopefully. Absorption is here. You see the selling delta. That's what this is. If the market goes up from here, it means there is passive buyers here. And again, like everything, we don't know until we see the behavior after the fact. So what did we have here? Sellers are here. Sellers are there. Sellers are there. You see the delta? If the market's not going up on buyers, then what's it mean? Sellers are absorbing the buyers. If the market's not going down on sellers, what does it mean? The buyers are absorbing the sellers. So easy to get lambasted in this two-sided trade. Now we have more. Over an ETH high has a high probability. So if you're getting long in here, and of course it's an aggressive trade because the structure is developing, this now is your opening swing low. And what do we know? The buyers in this leg potentially have their stops under here. Now, I always say the open is a dangerous place, and I don't mean to sound like a broken record, but if you're new here, you need to understand market mechanics. That's what the purpose of this is. Let's watch. Now this, I know some traders in Trader Lab took shorts here, because this is a microstructure for a short right against this. Now for me, I have no shorts. You're in a gap. I'm playing the longs. But that doesn't mean you can't, if subject to your plan and statistics, you can't take a short. But let's think about this a little further. If the higher time frame context is up, if we gap outside of yesterday's range, we are currently then out of balance. That means the higher time frame, which we can agree is up, new all-time highs, you might want to be considering, subject to time frame or fractal, longs only. Why? Because the sell stops are here for this leg. But what is the trend? It's up. This is an important question, and we discussed this in Trader Lab because you can be selling this. And where are you trying to go? Take out the opening swing low. So sure, you can do that. But I'm going to tell you my thought process on this is, if I see selling, it's a trade management opportunity if I'm long, and I'll get taken out. If I come out under here, I'm looking at statistics, which are below, like the overnight mid and this low volume node from the ETH as potential areas for a long for something called mean reversion, which would be to return here and go up for the statistics. So I'm just telling you that was my trade. So and for me, let's just say in TraderLab structured trades, which this is all based on, there was no short. If I was long, I get taken out of my long after scaling, so it'd be no problem. And then I'm looking to re-engage on the long side. Now, what I do has nothing to do with what you should do, because my time frame, if you want to use the term, might be different than yours. I'm not going to get short where the aggressors and the majority of the higher time frame participation is long. I use short structures for exits. It's just a way to look at it. So let's watch. Variable high volume node right here. So I know this is support here. I come down, right here, I have my opening swing low. This is where I'm looking for the stops to get taken out. So if I was short, which I'm not, I'd be going into these stops, looking for something lower. And of course, the joy of joys is I think it's a double bottom. Is that right, guys? TraderLab, can you give me a response to that, since it's a little hard for me to see this? And please give a thumb up and a like. Yeah, double bottom. Okay, thank you. Please give a like in YouTube, and remember, if I drop out, I'll come back as soon as the monkeys plug the power back in. Okay, so double bottom, quite surprised. That's life in the fast lane. By the way, the only thing you have, remember, is uncertainty. Part of the joy. So double bottom. So the shorts now in this leg. So this becomes our opening swing high. I'm going to put a little mark on this. And then I'm going to roll right along. I want to get through these trades because you're going to see method in a uncertain environment. The thing about trading, guys, it's very important to understand. There's no certainty in it. We are in a gaming business, and I need to always say this, and I say this because it's the truth. And our need to be right and predict and all this stuff is what causes us to do things that are not in our best interest. This is a gaming business, so you got to kind of think like a casino where they play the games exactly the same way. They don't know how anything's going to turn out, right? But they play a process that is anchored. That's the only way they measure it. So when they're playing their games, they don't know what's going to happen because they have no control over the cards coming out or how gamblers play, but they do control how they play. We also have the same thing. So in TraderLab, it's really about weaning traders off the common issues of needing to be right, predicting, looking for confirmation. It doesn't exist. I know we want it to exist. And why do we want it to exist, you ask? Because it's our nature to look for certainty and avoid the pain of loss and risk. It's our wiring. Now here I have a hole in the data. Thank you for Mr. Monkey. Let's see. And thank you on the response, guys, on the debug. So I don't know exactly what happened in here. I can't really reference it. Here's something, though. These are sweeps. And I have been talking about sweeps lately in the TraderLab. I try to focus on different elements and tools in Bookmap. And, at different times I focus on different things. So this week, sweeps. So here's a buy. So when you get a buy sweep, what I like to look at is what's the behavior after a sweep? Well, do we come up and then rotate down, or do we keep going? What happens at the sweep? Here's a sell sweep. But what do we do here? It's different. So here I have a sweep, and I'm looking for the behavior against this structure. See the behavior? We go up. All right, that's nice. Now what? What happens up here? sweep. Same as this, sweep, but I went higher. Sweep, I'm looking for the reaction. Break low. Notice the sweep, break high. I think I'll do a specific stream on sweeps one of these days, but if you're interested in sweeps, you go to bookmap.com, go to the knowledge base, and there's all kinds of examples, little snippets of sweeps, and you can read about what it is. It's an order flow phenomena, and you need, in my opinion, to learn how to differentiate your behavior and use the tools, whatever tools you have, whether it's Bookmap, a high tier order flow tool that gives you additional insight, or because if you're looking at a candle or just price, you don't know what happened here in the order flow. But this puts me on alert. I see this, I see the buyer, and I see the sweep. So what I know is we swept the book. Now what happens? Is that exhaustive? Well, right here, it's exhaustive, and I break below that microstructure, which is created by this micro high volume node. And what else is up here? The ETH high. What's the ETH high? It's a high probability statistic. If you were long from whatever structured trade you have, you're looking at this. And in the Trader Lab, I always say give it 2 to 3 ticks. And I know some of you guys go, I want it exactly. Well, me, I always leave some from the sweeper. That's an old baseball term, by the way, in the U.S., and I believe it came from the peanut shells that they would leave, and then the guys would sweep up the shells at the ballpark. If some change dropped down, they'd leave it for the sweeper. Fun facts to know and tell. You didn't think you'd get that insight here. So, sweep, microstructure. This is a fractal. Let me take you down. Get the electron microscope out. By the way, if you have questions, please post them. If you're in YouTube, please give a like. Let's look at microstructure trading and fractals. Right here is your volume. My passive sellers are here. There's the icebergs. More insight. Sellers are here and here. I'm below the buyers. The high volume is here. I'm taking you down into the microstructure. I get the sweep here. Now, right here, as far as I know, it's going to the moon. Except, here's the exception. Here's how Bookmap helps you. I see a sweep. Instead of it just going up and off we go into the wild blue yonder, I got something that says, warning Will Robinson moment. If Will Robinson's from Lost in Space. And many retail traders get lost in space. Sweep, break low. This is a potential trigger. Now, let's talk about a triggering structure. I took out the opening swing high, and this is my high probability statistic. If you were long, you'd be looking at this, and this is your put your helmet on. Now, here's the trigger. So I have confluence. I have my sweep, and I'm either going to continue up or trigger. So here's what I always talk about. Now, I'm hanging out here with you guys because I want to help you see how you use these tools, how you narrate. So when you break, you have a selling trigger. So now you have two choices. If you're a fader, and I use the term Darth Fader, this would be a short. It's not for me. Doesn't matter. Could be for you. Do you have a statistical edge taking shorts in front of a marching army at new all-time highs after a gap? That's a question for you to answer. For me, not so much. For me, this is a trade management opportunity to exit a long, not to take a short. Does that make sense? Again, I'm talking about time frames or fractals. I don't think in the clock, so I don't use the term time frame. Oh, hi, everybody. You know what? I wasn't able to see the YouTube chat. Yeah, Hemp Chat. Thanks, Jim. All of this information's in the Bookmap Discord Trader Lab community. Use the link in the bottom of YouTube. Also, if you want to access the Black Friday sale, 3 months of Global Plus data, I believe. Don't quote me on that because I can't see all of this stuff at the moment. Use that link down there. In the Trader Lab, there's no cost. if you're interested in these statistics that I talk about at the top of the stream, that and a library of webinars is available to you, plus Trader Lab community. So this is your exit, or you're just a tourist. Watch. Now, statistically, we did have that opening swing low with a double bottom. What's a double bottom? Most retail traders, many I should say, think a double bottom is a strong low. It's not. It's actually weak, because you're going to have a bunch of stops piled up under here. So this is why when I see this, and I know there's a double bottom, and you would too, if you're narrating, you got to note this stuff, not be myopic. You have to be thinking in a multiple dimension. Then I know I want to be out. And it doesn't matter. By the way, I could just get a counter rotation to here, and then it continues without me. Are you going to be okay with that? You know what? Hindsight's 20/20, right? You got to write that down too. In a random environment, that's all you got is maybe. So I see my absorption again here. This is the buyers. I come out and I take my opening swing low. What's under here? Sell stops. 424 sell stops. This is a stop and iceberg detector. And I think there's a special going on for that. I don't remember. You got to go to bookmap.com. There's all kinds of great things going on. It's too much for me to kind of go into, but I will show you that. But you can get all this information. It's really pretty neat what Bookmap's offering to you guys. If you've ever thought about getting your hands on Bookmap, this is really a good time. So this is absorption. So I see the sellers, sellers, sellers. I got a sweep here, and right here I'm going, well, we're below the sweep. Buying icebergs. Let's watch the behavior. But I took the stops out. There's the stop. So now the stop and iceberg detector is helping me understand what's happening here. There's the stops, 300, 400, 500. And as I open this up, it'll break them up. It aggregates them. So I can see any detail I want in here. Just so you understand, how far do you, it's like the limbo. How low do you want to go? I remember the limbo. It was Chubby Checker. Microstructure. Watch the volume right here. We take out the stops. Now the stops are out. I have this low volume node from the ETH, and I have the overnight mid, which has a probability of about 62%. Past performance not indicative of future results. Let's see what happens here. But I got absorption, microstructure, break high, potential trigger right here. I'm going to throw a little line on here. This is trading in fractals. What you're going to see me do is the same behavior. There's a hole in the data. And where's my resistance? Now, I don't know what happened here, so I cannot tell you what happened over here. I don't know. High volume is there. If this is accurate, and I can't tell you if it is. You'll see where this all comes from. Actually, let me do it this way. Sorry, guys. That hole in the data is disturbing. So I don't know what happened over here. So this is too high. Break here, test, down. Then this sets up a long structure, and this is your resistance. Break, take this out. Now remember, overnight mid, and there's no way to know about this, so what you're trying to do is align 62% probability to get here. And I think this was off a report, I think. I really don't remember. So we come down, and here's your high volume. Let's just look here. So the way this tends to work is who's ever on the wrong side of the swings gets filleted. So if you like the stops that are under here, then the stops are above here. Then we take out those guys, and then we come back and we take out these guys. And the trend is up. So subject to your plan, you might only be taking longs. Or if you're more rotational trade and you have a vetted plan, you'd be taking both sides. The thing about Trader Lab, so you guys know, there's not one way to do this. There's any way that works for you that has a statistical edge. And you're looking here to fill the gap, right? Well, lo and behold, it doesn't fill the gap. So no way to know. So let's look here. We get our sweep. We get a buy sweep here. And you got a sell sweep here. So when you get a sell sweep, what's the possibilities? The possibility is a reversal. I get a buy sweep here. I get a sell sweep here. So I have a buy sweep potentially down. I get a sell sweep potentially up. I get a buy sweep potentially down. But what's my trend? Up. What happened down here? High volume, microstructure, potentially too low. Back here. And the trend is up, don't forget. Very choppy. Look at this. Microstructure here. Get a seller. Sweep. I want you to see these things. Now you have a sweep and absorption right here. 1,000 iceberg. Can you see how this iceberg detector combined with sweeps and absorption might give you an edge? Here's your buyers, icebergs. Here's your sweep. There's absorption under this sweep. That's these icebergs. Another sweep, selling sweeps, buying icebergs, 1,000. This is all suggesting longs. And I think I posted this one in Trader Lab. I can't remember. You guys in Trader Lab can comment on that. So for me, primarily, there's no, where am I in real time here? Amazing. Shorts are not on my menu for today, but it can be on yours. You guys have questions? How the IS I'm not sure what the IS indicator is, Jess? How are we doing in YouTube, guys? Please give a thumb up. I hope you're getting something from this. Please remember, if I drop out, it's not intentional. It's the monkeys swinging on the vines here in Costa Rica. I will come back in. It could be the power, it can be the internet, or it could just be the wind blew. So that's what happens when you're in a little beach town. I mean, where you could, at 9 o'clock, they turn the lights out, basically. Ice and stops? Well, it's not so much making a decision, Jazz, the icebergs and stops. What it is giving you insight into the order flow and who's active at a level. Because if it stops, it's not, if stops are going off, it's not initiators. So often what we do, we see the market going down. Well, it goes down because of new sellers, and it goes down because of sell stops. In Delta, they both show up looking the same. So, or like this. So let's look here. The market's going up. Well, buy stops are taking it up. The shorts. Now here, I see 111 sell stops coming out, but the trend is up. So when I see these stops coming out and I see buy icebergs, think about it this way. If you got sellers and the delta shows aggressors, a stop becomes a market order, so it shows up as an aggressor because now it's a market order, and that shows up as delta. But I have an iceberg on the other side. It's showing absorption. When I come back here, I got stops coming out, but I'm still seeing the absorption. So that's showing me accumulation. Now, the fact that the absorption was here, in other words, the delta, and I see the buyers here, if I come back to this level, then potentially I got buyers still absorbing here. And then you could see the behavior. Now, this is all fractal. So out here is what's called a low volume node, or outside edge. It's at our opening swing high. The way the auction tends to work, it rotates. Because the market, sure, it can run in a straight line. But often what the market does is it goes directionally and then it goes into a rotation. Those are different conditions. And in Trader Lab, you would understand the context as it shifts in different time frames or fractals. And the thing about fractals, so we understand, I'm just going to help you give you a concept of a fractal, which is pretty important. And I know we all think of time frames because we learned that. But the fractals are not based on the clock. They're based on the participant behavior or rotation. So this is a rotation right here. Which side is dominant? Well, look at this here buyer. That's aggression. And here it goes into consolidation. Chop, chop. That's a consolidation. So I'm looking at who's buying these dips. Right here, I have an aggressive buyer. That's my delta. When I come back to this delta, and I have sellers up there, passive, you can't see them. There's the iceberg, you can see them. And the buyers were active here. The consolidation is here. Follow now. The buyers are here above these sellers. The buyers were there. They're saying, oh, really? Give me some more. Here's the high volume, retail price in this store. Think of it like shopping. I break high. That is saying potentially this is too low. Watch. Where were the buyers before? Here. Where do I come back? Here. What's too high in the microstructure? Here, because I broke away. So I'm showing you in micro support, which is there, resistance, back to support, resistance, back to support, resistance. You see this? Now, this is not tradable. What you can do with this, and this is what I focus on in Trader Lab, is helping traders toss indicators because they're lagging and conflicting and be right here. And then you take this understanding of language and extrapolate it to the range you want to operate it. So this might not be material for a specific trader. It might be material for a scalper or someone who wants to use microstructure for trade management. So if you want to get long, if you think the trend is up, you would not be taking shorts. You'd be either exiting longs or you'd be way out here, letting it counter rotate and then only taking longs or using higher highs after you get a rotation for trade management. And I'm saying all these variables are something that the individual trader vets to get statistical probabilities in their fractal or time frame. And this is the work part of this business. And by the way, the business of trading is really a statistically based business. So it's really a matter of knowing where your trade shows up, what the probabilities are of getting risk neutral, alignment, and then adjusting what you're doing to the time frame of fractal. Now, we have targets up above. Now, at 9:30 my time, Central Time, there's something called the first hour high and low. It's called the initial balance. Now, we're in record all-time highs, so we don't have structure to reference, only below us. So we have probabilities. Now, at Trader Lab, what are they? 1.5 times the first hour's high or low, or 2 times the first hour's high or low. There's a 68% probability that we get to 1.5 times the first hour's high or low. So the initial balance. So you take the range of the first hour high low, which is first hour high, first hour low, whatever that range is. You guys can help me with the math. So it's basically 72 to, 85-ish or so. Okay, about 13, 14 points. What's 50% of that? About 6 points added to this. Is that about right? Guys? What's 1.5 IB? Please give me a number. And what's 2 times IB? Throw a number in there, Trader Lab. I can't. I'm trying to juggle some stuff here. Not easy. Okay, 1.5 is 6092. Thanks, like a pain. 92. 1.5 IB, guys, if you're in YouTube, write that down. And 98. So those are measured move targets. And again, you have to vet these for yourself, and it's not a trade recommendation. Let's add that to the portfolio of maybe. So maybe, because that's all you got now. So it's trade management and maybe. So that's the targeting. And that's what you got. Now, let me try. Now, these green nodes, high volume nodes, this is generated, exported from my other software, Investor RT by Linsoft. And that's my software. There are other products that can export, or you can do this manually. I used to always do this manually, but it's a bit easier, to have it automated, and I can adjust the sensitivity. What all it's doing is looking at these high volume structures. When you see something that looks like this, and this is what the volume profile is about, the high volume there, the green line, is like a retail price. And think of it like shopping, like when you go to the store. It's the easiest way to think about this. This is the retail price. This is the fair price, and the market can go on sale, and it can get too high and rotate. So it tends to oscillate. And if this price becomes too high, we can break away from it, fall out of here, this thing, come back here, and come down to a level that was too low previously. Just think of it like going to the store. What did we do here? Well, we found too low down here. That was our last long, right? And now this is maybe too high, but that's too low. Shopping. Oh, it's on sale. Why would this be too low? Because it was too high here. We came down to too low, found our buyers, came through this price resistance, formed a new distribution, came back and checked it from above. Micro, too high. There's your short trigger. It's not a short, it's a trade management. Tested it. I'm not paying that. Come back here, too low. Oh, it's still on sale. Come back here, too high, right there. And now, whatever. Too low, retail, and we can continue higher towards the potential targets, which are 92, 98, I think they were. Just going to throw them in here just for fun. I think it's 1.5. I'm going to put it in here. I think that's right, guys. I'm just going to put 1.5 in here for now. And then you guys know the targets. Now, so for trade management, what is this saying? Right here, let's read this. Follow the yellow brick road. We had a sweep here, and we know if we have a buy sweep, we might see a reversal. Now, reversal doesn't mean the end of the planet. All it means is rotation. I have sellers here, passive sellers here. You see the icebergs. Sellers get below here that says counter rotation. Sellers, where's it going? I don't know. But where was my retail price that was too low? It was here because resistance becomes support. You heard that before. Sellers are here, buying icebergs, sell stops come out. Buyers, aggressors, where's my resistance? Right there in the microstructure. Sellers are here. Where's my support? Back here. Absorption, up. See the behavior. Now, this is not about scalping. This is about understanding what's happening right here. Now, what it is if you can understand where behavior might underline take place, does that give you an edge over other traders who have no idea really what's going on and are letting indicators translate behavior? The reason I don't use indicators is because of ambiguity, conflict, and we trade in, quote, multiple time frames. And I don't use the clock because the market does not operate on the clock, except for the open close and a couple other, EU close and things. Other than that, it's operating on what happens right here between these participants. When this changes and I get a seller here, I can anticipate, and that's all you got, is a rotation. Now, what you don't know is where to. Why wouldn't it come down here? Why wouldn't it come to the mid? You're going to ask me, and I'm going to say I have no idea. The answer lies in the demand and the context, which is up. How far might it come back? No way to know. This is called VPOC migration. This is an event that's pretty important. Now, I'm also going to mention another structured trade. I haven't been doing too much on that today. They're all available to you in the Bookmap Discord Trader Lab community. And there's a link in the bottom of YouTube if you're inclined. There's a library of structured trades, 60 PDFs you can download, statistics, a library of webinars on this process, as well as the Trader Lab community, which is a serious community. It's about building out the business of trading. It's not romper room. It's really, it's a tremendous community of traders helping traders. We all are always striving to get better. And it doesn't matter how long you've been in this business. I'm going on 45 years. I'm still want to get better. Why wouldn't I? Why wouldn't you? And if you have something, it doesn't matter, bring it. We all improve together. It's the leverage we create. So this is now the retail price. What is this saying? It is saying this is too low. And at the moment, the market is accepting this is the new retail price. Now I'm going to show you the next trade over here. It starts at 9:30. It's called the IB continuation trade. It sets up in here. 9:30 we get the IB high, which we break. Now we break under it. There is no IB continuation. We pull back here. This is the next long. The scale would be at the IB high, which is here, and then you're holding for 1.5. Okay, let's just watch that trade. So that's the last long. Now we are looking for an IB continuation trade, and it sets up here. So you're looking for a long. So here's what would happen on this trade. If you took the IB continuation trade, now remember, you have to stay away from these swings. Right here, you get your trigger. This is your resistance. Look where we come. We come down. You get another micro trigger. There's your sweep. Remember, reverse reaction. This would be a long in the Trader Lab. Here at the IB, you would probably not get scaled. Your resistance is here. We come back. You get VPOC migration. There's two possibilities right here. You need it to push off here to continue to here, or you break down and you're going to take a stop. That's life. That's trading. Now, what's our outside edge? It's here. This is a low volume node. Here's your sweep. This is another long in the Trader Lab right here. So one of the things I suggest to Trader Lab participants is the following. If this is the area, the outside edge here, low volume node, right here, let's just watch this structurally. Now there's a number of pieces, so it isn't, you have to see this in its totality. Trend is up, longs only, for me, not for you, me. You might be you might be Darth Vader, and that's great if you have an edge. So let's look at the language of the market. Here's what we know. On the way up, we had aggressive buyers here. We had our sellers here. We have our buyers here. Resistance is here in a microstructure. Support is here. The outside edge of this distribution is out here. And it's created by this. This is support. This is support. This is your outside edge. Let's just look. What's this? Support. So, what do I get here? Sweep. We're talking sweeps today. What is this in the microstructure? Potential long. Obstacle. Target. Now, this has to fit your range. Can everybody see the language of the market and the confluence? Who was asking me about sweeps and stops and icebergs? The names are truncated in the Trader Lab because of this. I'm on these little monitors here. Sweep here, support, long. Microstructure, absorption, break low. This is your retail price. Sweep, this is too low. Microstructure, this is a long. Let's look at the microstructure. It's there. Now, how do you do this? Now, this can be problematic because of the range. I'm showing you structured trades. Whether or not you operate in this is up to you. Do you have an edge in this range? How do you enter this thing? Let me give you an idea. And I hope you're getting something out of this. So let's look at this. This is our support. So sweep, antenna goes up, going to zero. I got my seller. What happens here? I've got my retail price, which was created back there, high volume node. I've got my outside edge created by this. And right here, I have no clue. Remember, clueless. Break high. Now what do I know? I had my sweep and I have a 202 sell stops. Thanks for playing. Broker sends you a gift basket. Buyers are here. I get my sellers here again. Sweep. So sweep, sweep, high volume, break, right here. You put a limit order in this volume. Now I'm in an advanced process. So if you're looking at this and saying, well, how does he know? He doesn't know. What he understands is the sweeps. So this is the insight the order flow tool is giving me. I wouldn't understand this without having the tool. So this gives me the ability, plus understanding the auction, which is saying retail. Too low, too high, too low, too high. Volume is here, retail, break high, trigger, pull back to the microstructure. Now this is advanced. You can learn this in TraderLab though. So what I do is I would put my order, give it 2 ticks. Stop is under here. I can handle that. Can you handle that? 6 tick stop. And then I'm going for my targets above. And then whatever happens, happens, right? And where's my target? Here, 92-ish, plus trade management. Now, I don't anticipate you guys would understand this if you're new to TraderLab. If you're in TraderLab, you would understand it. Would you be able to execute it in TraderLab? No. Why not? Practice, practice, practice. Intentional practice, screenshots, replays. This is advanced only in the sense of how micro I am. In the broader strokes, it's the same process. So depending on the fractal, and I use that term because you could just be sitting long from here. This was the other long I showed you. Are you guys following? So you could be long here, you could be long here, or you could just be long here and working on your crochet and your Barca lounger, going for this. This is also, remember, structured trade, all this is TraderLab. I'm not saying you should be taking these. I'm saying is you can learn to understand them, and then based on the statistics you gather over a large sample size of random behaviors in a random environment, just like the casinos, you determine if you want to play that game. Does it have an edge that favors you versus the gamblers? Also, if you're making it up as you go, having a good time, that's okay, but you're sitting on the side of the table with the gamblers, I think it makes more sense to understand the business of trading and sit on the side with the house. Remember, this is gaming theory. It's not prediction, it's not a video game. That's assuming you want to be in a business. The other part of the business is the casinos pay the gamblers. They even give them the cocktails and the ticket to the buffet, and that's overhead and costs of production. And think about any business. Doesn't every business have that? Well, so does this business. So the idea is after you pay your expenses, which is why you should only be playing games that have an edge, just like the casinos, every setup or structured trade, you see it as its own game, and only play the games that are in alignment that have an edge. And that means alignment with the context, which currently is up. Does that make sense? And you only interact when your edge shows up. You're not here to play a video game. Unless, of course, you want to, and that's okay. But don't expect the longevity. If casinos made up games, depending on how they feel about it or what happened on the last hand, they wouldn't be building larger casinos. They'd be going out of business. Does that make sense? How we doing in YouTube, guys? Please give a thumb up. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. There's no cost to visit and become part of the Bookmap Discord Trader Lab community. Take advantage of all the education, not only what I do in the Trader Lab, also there's stocks, options, crypto, order flow with a high tier tool like Bookmap, of course. Crypto, options, much more. Swing trading, algorithmic behavior, and there's a lot more, and there's all no cost. And don't forget, there is a special going on this Friday, the 3 months of Global Plus, the Black Friday special is going to expire. And I believe I don't have all that information in front of me. I will have it. It will be posted in YouTube and the Bookmap Discord Trader Lab. There's 3 months at a large discount plus data, I believe. And there's also a Cyber Monday deal going on that'll go a little bit longer, but not quite as sweet. I think the 3-month one is the best I've ever seen Bookmap do. And then there's a specific competition, a trading competition that's going to launch, and that is for Bookmap subscribers specifically. And if that could be posted, that would be really helpful. It's a little hard. It's hard for me to be posting links, but take a look for that in YouTube. And I can't see if they're getting posted. Please give a like also if you're in YouTube. Remember that if you want to review this stream, it's available to everybody. Let's watch the behavior here. Now remember, this is the IB. Now there's 2 possibilities here. Pick the stops and reverse out of here. Our outside edge is down here, or there's going to be potentially stops under here. And then if we pick these guys off, we can come back here. That's part of understanding the auction. Because what's under the swings? Stops. So right now, you have to determine where's your next trade. We know this was too low. We had a trigger here. If you return and we had our sweep here, then we can pick off stops and come back to there. So we're going to watch it right now. This is not a trade recommendation. It's really an observation. If you're managing your trade, remember there's a couple ways to do this. You can be far, far away in a galaxy far away, and you're just going to ride out these things because that's your time frame. Or you're going to look at this as a microstructure, and we come back, it's resistance. This is support. This is resistance. This right there, you see the structure? Break. Where's your resistance? It's sitting right in this high volume. Do you see the high volume? So this is microstructure. So it's, you can see it. It happens here. Too high, too low. Too high, too low. Outside edge. These are still longs. Too high. Where's it coming back to? Resistance. Break. Break. Too high. Too low. Too high. We'll find out. Stops are under here. Now what happens here? Outside edge is here. So the stops are under here, under here. So your job is to have a plan before the fact. It is not making it up here. It is just following the plan. So in here, so where's your next long? Well, what do we know? We know the outside edge is out here. Low volume node is an outside edge of a distribution. A distribution is another term for consolidation. And there's typically stops out at these outside edges. We got the VWAP here, and we got the mid. And we have a variable high volume node. Let me mark this. The moment right there. So let's read the language together. Because it is language. Remember, foreign language. And it is foreign to us. But if you learn it, you can speak it. So this is the retail price that was too low that we rejected. There's stops under here. If we come under here, we have the VWAP. We have structured trades in the Trader Lab. We can come out here, or we have something called VWAP, or this to VPOC. Still longs, not a recommendation. So the way the trade might work, not a recommendation, is to either come out here, to the IB, I mean, back to here. Hold on a second. Getting delirious here. Yeah, VPOC is here. So we are looking for a long to here and out the top, not a recommendation. VWAP to there, out the top. That's one trade. Out here to there, out here to there. So those are structured trades in Trader Lab. Hopefully we have enough time. We got 20 minutes, and hopefully the monkeys will behave down here in Costa Rica. And we'll see if these structured trades show up. Now, again, the fact that they're structured doesn't mean they're mechanical. What we know is context is up at the moment, and it can change. We have a structured trade that you have to vet if you're in the Bookmap Discord Trader Lab community. And how does this work? You are waiting for your bus. What do we know? This is an outside edge of this distribution. We can test it. The stops are under here. See? So the longs in this leg and in this leg have their stops here. You need to be looking left. So I don't want to run in here. Do you? I want the stops to come out, and then I want to see absorption. Now you see how we had a sweep here and we got the leg up. So I'm going to be looking for sweeps, and I'm going to be looking for absorption, and I'm going to be looking at location. This is my area, and I'm looking for this and out the top. And I want to stress, I don't call trades, because why should you take my stops? I take them. Why wouldn't I? Remember, we're looking out here. Microstructure is here. Let's see what happens. Very carefully, very cautiously, very intently, and extremely patiently. Stops are under here. Buyers are here. Passive side is up here. Sellers were here. They are absorbed. You have stop divergence here. If you haven't heard that before, come to Trader Lab. I'm using order flow tools. I have to be extremely cautious because of this swing. My resistance, I have two places, here and here. For me, now let's think about, how do you trade? What do you do? Well, first of all, you identify the context which is up, right? I think we can agree. Trend up. The other part is, where are your trades? Do you just see this and you take a long, which, by the way, could work and could be the trade of the century? Or is your trade plan suggest you have to wait, because just because you get a rotation here doesn't mean you won't take these sell stops out that are piling up at this outside edge. And the thing is, you know what you will do before it happens. So what we know is outside edge, we know there's stop divergence, and we know the IB high is resistance, and this is retail. So what we know is we can come up here, come to here, and bounce. We can come here, come back to here, and bounce. We can come up here, go through here, and go to our target. That's what I know. Now, that's all I know. I don't need to know anything more than that. So my trade plan has to suggest the following. I have no trade until I take these stops out, right under here, and I don't do anything. I come down here, I now look for absorption, and I pop the stops here, and I take the trade back to here and up to here and out the top if it does that. If I have no trade here because I'm getting in front of sell stops, I don't have a trade. Can you manage yourself emotionally when you see this happen and not react to FOMO? That's the question, because it's the FOMO. and the emotional stimulus that will, among other things, take you out of the business. Do you know if you have an edge running in front of the outside edge where all the sell stops are piled up? Can you understand why I would not or might not get long here? Is this making sense? This is Trader Lab. Oh, the VPOC hasn't migrated, guys? So my VPOC, wait a minute. Oh, it's down here. Sorry about that, guys. That changes things. I have data hole, so this migrated because it did not. I have that hole from the monkeys swinging on the vine. This is accurate. Thanks, guys, for pointing that out. So, okay, that does change the lay of the land. This is an outside edge, so there would still be no trade until we come out here. And here's another trade for you guys to consider, a little more advanced concept. The VWAP to HVN, advanced. Let's see what happens in here. So I'm taking a fractal. So we're going to watch this, and I got to go look left again. So I got the stops out. Remember, that's why there'd be no long. I have a VWAP or mid trade back to here, and then potentially to there, and then wherever. If I get a VWAP trade, my trade would be potentially to there and to there. It's the same trade as the VWAP to VPOC, except it'd be VWAP to HVN to HVN. They're still mean reversion trades. These are structured trades. Let's just see. Not a trade recommendation. I'm missing data, so I'm sort of, don't have everything quite the way I like to have it. Watch the behavior. 128.11 sell divergence, icebergs, sellers here, buyers here. If I get above right here, I'm looking to see the microstructure, which is right there. Micro behavior, let's watch. If I get it long, I'm looking for the high volume here. And if I can get through here, I'm looking for it to come back here. This is potential mean reversion in a fractal. It's kind of advanced, and it's not a trade recommendation. So when I was talking about VWAP to VPOC, it's the same trade, except it's fractal. I'm taking a derivative of a trade I created, and I can explain this more if you're in Trader Lab. Trader Lab, do you guys understand the rationale here? I'm getting a question from Trader Lab. When I'm stalking microstructure, how far do you find you normally zoom? I go down as far as I need to go to read the order flow at location. So the VWAP to VPOC trade is a mean reversion trade. A derivative of it is the VWAP to HVN trade. Where you see this VPOC, which is in the wrong place because of my data loss, the VPOC is actually here. But the behavior of mean reversion is a constant, which is back here. So if I get a mean reversion trade, I'm trading this fractal, and all I did was come under here. Remember, the stops were sitting here? Guys, this is something, when you review this stream, you need to be isolating what I describe because I'm anticipating it. Now, remember, I don't predict anything because I'm clueless. Remember, not ignorant, clueless. Clueless is accepting randomness. I can't predict. Neither can you. So what do we have if we can't create certainty and we can't predict? We have, number one, continual uncertainty. So that's a problem for us emotionally and psychologically. We are driven for confirmation, which is why we load indicators on, because we don't want to get bit by the saber-toothed tiger. I get it. but you should understand why we do certain, what motivates us to take behavior that's not in our best interest. That's our need to be right. Well, that's lovely, except you're in the wrong business for that. Casinos don't know when they're going to be right, wrong, or indifferent. They only know probabilities over a large distribution of interactions with the gamblers. So if you can think about that a bit, write that down. That's the business you're in. If you want to be in this business, you got to reorient yourself to the business you're in, not the business you want to be in, which is a business of certainty. It doesn't exist. If it doesn't exist, why are you trying to create something that doesn't exist? I understand. We all have done it. So, if you can accept it doesn't work here, then you might focus your efforts in probabilities and then become comfortable with uncertainty, but have something tangible called statistics. Emotions are what drive you if you don't know the probability of getting long here to come back to there. Do you have the answer to that? If you're in Trader Lab, you would. And it doesn't mean you're going to get a successful outcome. It means you would know that the probabilities in this condition of, first of all, coming back to this, which was where we had our sellers, is a probability. If I can clear this is resistance, by the way, micro resistance. You can see it there. Too expensive. Come outside, take the stops. Right? VWAP. What happens at VWAP? Back to resistance. I'm not paying that. This is your local store down the street. Too low. Resistance. I'm not paying that. If I can clear this, I got this. That's the trade. And if I get through there, north by northwest, that's as deep as this gets. And random. Is that making sense? I hope I answered the question. I can't see who asked it. Everything is truncated. I can't see it. How are we doing in YouTube? Please give a thumb up, give a like. I hope you're getting something out of this. This is advanced concept. Trader Lab, it's for everyone, but it is a advanced approach. You don't have to be advanced to become advanced. It is not typical. Most traders in Trader Lab have walked in your shoes. I certainly have. I started trading in 1980. And I've been a professional money manager, and also now out here with you, and just about everything you've ever thought of, I had time to do, and more probably, unfortunately. And a lot of it was trying to squeeze risk out and create more certainty. So that's where I got into system design. Trading systems optimization, and better term for optimization is curve fitting. Most retail traders do derivatives of the same process. More indicators, more tweaking, more tuning. I did a special webinar on it called Trader Groundhog Day, where you keep waking up in the same place. And the other thing that really fools us, and it did for me, was runs of winning trades. Gamblers win at the tables too. So they think they've got a winning process, where statistically they lose. Just a matter of the distribution of random outcomes. Why would this trade be a Trader Lab structured trade, you ask? Because it's based on market mechanics, how the market works, why it does what it does, structured trades, so you would understand where your trade shows up, how to get in alignment, how to manage your trade, and how to put on a bulletproof vest and a helmet, because everything is random. And the coup de grace in all this is the order flow. Because with order flow, I know potentially, I'm always going to use the term potential because there's no guarantee in this, why the market will go here. Is this a trade that you understand, or would you like to? And is this a trade, when we get the trigger, that you would put on with a stop under here, going for here? Would that work for you? There's the question. If so, use the link in the bottom of YouTube. Come visit the Trader Lab. Why wouldn't you? Why wouldn't you improve? And do you think you might glean something? And by the way, bring what you do here. There's no one way to trade, but I'll tell you, if you can't measure it because of random inputs, you're sitting with the gamblers. A personal opinion. And we all have winning trades. Remember, if you close your eyes and hit buy or sell randomly, you'd still have winning trades. What does that tell you about tuning, tweaking, and curve fitting? You're always going to keep waking up in the same place. So remember, where were we looking? Here to there, out the top. Again, not a recommendation. Here, and then where's the next one, guys? There was another one. Where was the next target? Target number 2? 60, 90. No, that's 1.5. Where's 2.0? 98. Thank you. Thanks, Willers. Yeah, 98. So these are measured moves, not recommendations, nothing. It's just maybe. Write that down if you're visiting Trader Lab and you're new here. And we appreciate you coming by. The best you have in trading is maybe. Take yourself off the hook. We're not in the fortune-telling business. We all want to be right. We all need to know. And how about being in a business where you can't be right, you can't know, all you can be is playing a statistical probability and following a plan with a random distribution of outcomes. That's the right or wrong. Nothing else. The right or wrong. And by the way, look where we came. Let's come back. I know it's magic, isn't it? But it's not really. Too high, too high, too high. And what's this? Maybe too high. Can you see how this might work? So what I'm doing is I'm watching right here. This was the resistance. And what's happening up here? Well, buyers, passive sellers, sellers. If the seller gets below this buyer, it is now microstructure resistance. What do I have here? Buyers are here. There's the micro high volume. Sellers are here. Micro high volume. Support, resistance, target, not a recommendation. Please give a thumb up. And let me remind you, while we're waiting for this to ferment, if you're in Trader Lab, you know not what will happen. You're speaking the language of participant behavior, combining order flow, market mechanics, understanding how the market works, why it does what it does, how to get in alignment at times with structured, vetted trades using order flow to see under the hood. Notice what we had here. You got sellers here. Does that mean the market's going to go down? Well, I got more sellers here and I got 100 buy stops here. Who's getting short? It's not me. Might be you. It's not me. And if you're in Trader Lab, probably not happening in Trader Lab, hopefully too much. And by the way, in Trader Lab, you can be short, you can be long, and you could be out to lunch, literally, because you already had a great day. And there are traders who do that. They take, because it's multiple time frames as you think of them. And some traders trade broad swings. Other traders are in here in this, which, I can't trade in this because of my cost and by the time I enter. So I trade a broader stroke. So remember, where was my long? Here. Where to? There. Then what? North. Does that make sense? That's Trader Lab. Please give a thumb up and don't forget we have some things going on. The Black Friday special, you can save 50% on Global Plus and the data, and this ends on December 6th. I think it's 3 months. And please put that link in YouTube, guys. Trader Lab, put the link in Trader Lab. We also have the, losing it here, literally. And then there's Cyber Monday, which is going on, and I think I lost that one. And then for subscribers only, December 10th to 12th, for Bookmap subscribers, there's going to be free MBO bundle package that stops in Icebergs, Trader Map Pro, the Market Pulse Algo Suite. Very cool if you want to learn all about that. And this stream, and I do use all these tools, but the stream I have to kind of keep things, to a certain minimum, you might say, for educational purposes. But you can learn all these different tools, and different traders incorporate different tools into their toolbox. Remember where we're going. Here So here's the question if you're visiting in YouTube. If you took this long, which is a structured trade in the Trader Lab, and you anticipated as I narrated it in the stream, is that better than trying to make it up? Do you get long here? Do you get long here? Well, for me, where was the trade? Here, structured trade. You can learn this if you're interested in it. And no, you're not going to come to Trader Lab and be a whirling dervish. You have to get realistic. This is developing a career path. You have to roll your sleeves up. This is like an advanced degree in trading. I'm not saying it'll work for you. Past performance, not indicative of future results. You got to do the work. And most traders have FOMO. They don't understand what FOMO really is. That's clicking the mouse and looking for action. That's a dopamine thing. You will learn more about yourself in Trader Lab than you might have ever learned before, because the things we encounter in this business are unlike anything we encounter in the outside world. It is really a native, not a native environment, a foreign environment, like landing on Mars. And we typically take the truths we believe that we adopt from our outside world, the real world, if you will, and bring it here and try to wrap trading around those beliefs. You will find, in my opinion, with very few exceptions, that what you believe to be true is not true here. And you have to rewire your thinking and belief system and adapt it to fit here. Most retail traders don't have enough time or assets to get past the curve to undo a dysfunctional belief process so they can adapt to this business. And I hope you won't be one of them if you keep persisting with a dysfunctional process. If our beliefs are not in alignment, no matter how hard we try, we're going to keep waking up and trade Groundhog Day. So I suggest you give that some reflection. And if that's the case, feel free to visit Trader Lab. There is no cost. There's a link in the bottom of YouTube. Feel free. There's a link down there. Visit Trader Lab. Also, I hope those links got put in YouTube and please, if you're visiting on YouTube, if you want to take advantage of the Black Friday special, there's only a couple days left to take advantage of that. If you're a Bookmap subscriber, there's a new competition going to be available exclusively to you. But if you do come to the Bookmap Discard Trader Lab community, it opens the door for a lot of additional educations, large cap, small cap stocks, iceberg behavior, algorithmic behavior, order flow with a high tier tool like Bookmap, a lot of cool tools that give you potentially an edge over other mechanical retail traders. You need to know how to differentiate yourself from other traders' outcomes. We know statistically they don't do well, and while past performance is not indicative of future results, the Trader Lab's a supportive community. We all work together in Trader Lab. Nobody has a, quote, monopoly on trading. What we all do is have the same experiences, and maybe being in Trader Lab can cut down your learning curve because we've all walked in your shoes. We've all believed we're on the right track when we're really just waking up at dead ends. If that's you, don't worry about it. It's normal. The thing is, what are you going to do about it? That's why I created Trader Lab. I went through too many years of waking up in the same place with Trader Groundhog Day. So if that's your experience, you don't have to keep doing it. Come to the Bookmap Discard Trader Lab community. Take advantage of all the education. Stocks, options, crypto, a lot more. Download the 60 PDFs of structured trades I have shared, plus the library of webinars, and of course the Trader Lab community. Thanks, everybody. Remember, these streams are available exclusively to Bookmap Discard Trader Lab participants. Reverse engineer, screenshot, and the rest. Yes, that's my countdown clock. The news event is me running out of time, and I turn into a turnip or something. So thanks, guys. Please give that like in YouTube. Appreciate you visiting the Trader Lab today. Click that link if you want to visit Trader Lab, and I look forward to seeing you guys tomorrow. Have a super day.